For decades, real estate was considered the crown jewel of wealth building. From luxurious skyscrapers to rental properties, it was the go-to strategy for investors worldwide. But in 2025, something surprising is happening. The wealthiest investors are quietly stepping back. Rising rates, tighter regulations, and shifting global trends are changing the financial landscape. The once unshakable asset class no longer feels untouchable. Let's break down the real reasons why smart money is moving away from real estate this year. 10. Rising interest rates are crushing returns. As central banks continue tightening monetary policies, borrowing costs have skyrocketed. Mortgages and commercial loans now eat deeper into profits, shrinking once lucrative margins. Even wealthy investors who once thrived on leverage are finding financing far less attractive. Instead of double-digit returns, many now face break-even outcomes after interest and maintenance. The high cost of debt means less cash flow and reduced scalability. 9. Property taxes and maintenance costs are exploding. The cost of holding real estate has risen sharply in nearly every major city. Property taxes, insurance premiums, and maintenance expenses have all surged beyond inflation. For luxury assets, those numbers can erode profit faster than rent can recover it. Wealthy investors have learned that the effort and expense no longer justify the yield. The once stable income from properties now feels burdened by constant costs. As expenses climb, investors are finding that even prime locations can quickly become financial liabilities. 8. Shifting demographics are redefining demand. Millennials and Gen Z are reshaping how people view ownership. Many prefer flexibility, minimalism, and digital investment options over traditional property commitments. This shift in demand has weakened the rental and resale market in many areas. Investors who once counted on a predictable buyer base now face uncertainty. The wealthy recognize that long-term demographic trends matter more than short-term price spikes. As living habits evolve, real estate's dominance as a wealth builder is slowly fading. 7. Oversupply in luxury and urban markets. The past decade saw a construction boom in high-end real estate, but in 2025, many of those developments remain half-empty. Oversupply has outpaced demand, especially in cities once thought invincible. Investors holding luxury condos or commercial towers are seeing declining occupancy and price stagnation. The elite know when to exit a saturated market, and they're quietly doing so before values slide further. Oversupply doesn't just hurt prices, and it destroys confidence, making recovery slower and riskier. 6. Regulatory pressure and rent controls. Governments around the world are increasing regulations to control housing costs and protect tenants. While socially necessary, these policies often hurt investors. Rent control caps profits, eviction laws increase liability, and property rights grow weaker each year. For high-net-worth individuals, flexibility is everything, and real estate now offers less of it. Regulatory constraints are transforming real estate from a free market asset into a tightly monitored utility. The wealthy prefer investments with freedom, liquidity, and fewer restrictions. 5. The rise of digital and alternative assets. In 2025, digital assets like tokenized funds, blockchain-backed securities, and AI-driven portfolios are attracting sophisticated investors. They offer global accessibility, instant liquidity, and minimal overhead, something real estate can't match. Wealthy investors see higher returns with lower barriers in technology-driven markets. While physical property remains tangible, it's slow, expensive, and limited. Digital diversification now feels smarter, faster, and far more adaptable to the modern financial world. 4. The hidden risk of climate and insurance costs. Natural disasters, rising sea levels, and unpredictable weather patterns have made property insurance expensive and unreliable. Coastal and urban properties face mounting environmental risk, driving premiums higher than ever. Many insurers are even withdrawing coverage from high-risk zones. The wealthy don't gamble with unpredictable liabilities. Instead, they're reallocating funds to assets that aren't at the mercy of nature's volatility. Climate risk has turned once prestigious investments into long-term burdens. 3. Shrinking rental yields in saturated markets. Rental income once provided stable, compounding growth, but those days are fading. Overbuilt markets and changing tenant habits have pushed yields lower, often failing to beat inflation. Wealthy investors now find better returns in infrastructure, private credit, or alternative energy. When your capital works harder elsewhere, holding on to slow, illiquid property no longer makes sense. Rental returns may still exist, but compared to modern investments, they feel outdated and inefficient. 2. The liquidity problem of real estate. In fast-moving markets, liquidity is power and real estate lacks it. Selling a property can take months or even years, especially in unstable economies. For the wealthy, liquidity means agility, the ability to exit, reinvest, and pivot quickly. Real estate, with its legal delays and heavy taxes, limits that flexibility. Investors today prefer assets that can be rebalanced instantly. The modern era rewards those who can move money fast, not those tied to immovable assets. 1. Strategic rotation toward future industries. The elite aren't just leaving real estate, they're moving toward innovation. Capital is flowing into green energy, AI infrastructure, private equity, and digital technology. These fields promise scalability and growth that property can't match in 2025. Wealth always follows momentum, and right now, that momentum lies in digital transformation. The smartest investors aren't abandoning wealth creation, they're upgrading it. Real estate built past fortunes. Technology will build the next ones. Real estate will always have value, but in 2025, it's no longer the only path to prosperity. The world's wealthiest investors are shifting focus not because property failed, but because opportunity has evolved. Diversification, liquidity, and technology are redefining what it means to build lasting wealth. If this opened your eyes to where the real money is moving, make sure to like this video, subscribe for more financial insights, and stay ahead of the trends shaping the next generation of investors.